fixed maturity plans or FMPs have been ruling the roost as far as debt funds are concerned. Now, with higher interest rates and uncertainty in the equity markets as well, does it make sense to place your bet on an FMP? Dhirendra Kumar joins in as always to tell us just that. Dhirendra, what is your sense? Should one go for FMP in the current market environment?
Yes, FMPs are attractive for anybody with a fixed time frame in mind, and there are a lot of fixed income investors who have a defined time frame. So for them, FMP could be suited. Perhaps it's the last time when one can lock into a higher interest rate. But if you have very short-term, horizon, 3 months, 4 months, and so on, even short-term funds make sense because FMPs are a compromise on liquidity. And even short-term funds are yielding reasonable return today.
Dhiren, what are the advantages of investing in an FMP and what would be the disadvantages from an investor's point of view?
Key advantage is that you get predictable return. You are insulated from the volatility of the fixed income funds otherwise too. The other side of this is that it is a compromise on liquidity. You can't lay your hands on the money in the interim. If you have locked in for 18 months or a 20-month FMP, then you can't realize it in between. Post-tax, it is much better than a fixed deposit. So and diversification, I think you are unlikely to be faced with a difficult situation with these funds. They're very high, reasonably high on quality, despite the compromise on liquidity.
So, Dhirendra, what are the advantages of investing into an FMP like you were just talking about, and what kind of investors are FMPs that is best suited for, and what should be the ideal allocation in one's portfolio?
Allocation, it is suited for any investor who is risk averse. And it should not be your primary, it should not be your emergency fund because the lack of liquidity. So it is not a kind of fund which you can realize any time. So if you're creating an emergency fund, FMP can't be a choice. But if you're looking at superior post-tax return, post-inflation, not necessarily post-inflation, but most attractive return on a post-tax basis, somebody in the highest tax bracket, I think FMP is a far superior fixed income option despite its compromise on liquidity.
But Dhiren, with returns looking reasonable in the fixed income space, especially for the shorter term funds, do you think investors should then move to fixed income? Shorter term investors, I think they are getting a very high return on the short term funds today. So for them, I think even short term FMP doesn't make sense. But anybody who has 12 months and more, unfortunately we don't have very long term FMPs because the underlying investments are just not available. So from that point of view, you can't really lock your money for a very long period of time, which will yield high return. But anywhere between 1 year to 2.5 years, one can lock into a very high return available today, which may not be available in near future.